What is up, guys? My name is Bryce Pruitt, this is the M1 Journey, and welcome to the channel. Hey guys, and welcome back to this Tuesday episode of the M1 Journey, episode 29. We are experiencing a little bit of a downturn in the market. The first really red day we've had in quite a while. Some inflation concerns have really spooked some investors that kind of triggered a little bit of a sell-off, particularly in tech and growth-oriented stocks. I guess, this is the first kind of turbulence we've ran into in about a month or two, so I don't really think it's too much to read into. Actually, I think it's presented some interesting buying opportunities if you are a more growth-oriented investor. I actually did make a move today in my aggressive portfolio, which I'll talk about later. Kind of excited about that. I bought Tesla for the first time, so I will discuss more about that later. But anyway, guys, yeah, just pretty much hang in there. I don't think it's too much to look into, just a little bit of volatility, but I do, again, think buying the dip in some cases would be really looked at if you are, again, a growth or swing trader, someone who buys and sells quite frequently. But other than that, guys, of course, if you are new to the channel, welcome. Go ahead and subscribe, as well as like this video if you do enjoy it. And if you are a returning viewer, thanks for coming back. Of course, I will not be making any videos next week due to my trip I'm taking, so no videos next week. I hope to get back on the schedule the following week, even though that is when I start my new job. So kind of bear with me. I'll try to let you guys know what I am doing. But other than that, guys, there really is no major channel news. Of course, check out my social media pages in the description down below to stay up to date on all of those announcements of when I'm making videos or if I am behind schedule. So yeah, check that out. Other than that, guys, I'm just going to make my disclaimer and then we'll get into the portfolio update. So of course, guys, I am not a financial advisor. I am just 21 years old, so please do your own due diligence, research, or consult an actual financial advisor before making any investment or money decisions. I do this strictly for your entertainment and as a hobby for myself, so just be aware of that when taking anything I say into consideration. So with that being said, let's get into the portfolios for the week. Okay, guys, so here is this week's portfolio updates. As you can see, we have barely broken even so far this week for the first time in a while. Actually, there's about 30 minutes left in market hours, so this could change a little bit before things wrap up, but most of this is due to today down about $400 and about 1.5%. As of a few minutes ago, this actually was a little bit worse. We were down about 450, so markets have crawled back up a little bit, but through the month, though, we're still having a fine month. We were doing a lot better before today, but again, that's to be expected. There's going to be some drops here and there. For the quarter, though, still having an outstanding quarter, up about 10% with this money-weighted return with a gain of about $2,400. All time since July 2nd, we are up about 39% or $6,200. We've earned about $530 in dividends. So things still going very, very well for this portfolio. I mean, nothing really has, I guess, shot up too much in the last week, but we did have a couple of winners. First of all was Lowe's. Lowe's had a pretty good week, up about 2.8%, but I do also want to give a shout out in the energy pie to Exxon. They had a nice week as well, up about 2.49%. Also on this pie is our loser of the week, again, Brookfield, down about 4.35%. They've had a pretty tough month, down 17.5%. That is why in the last update video you did see me buy Brookfield pretty aggressively, so I'm up to about 17.8 shares of Brookfield Renewable Partners. So get into the activity of the week. We did have one dividend. That was Lowe's, paid out $4.06. I did make my bi-weekly deposit of $150. Plus I did have some spare cash in my account. So I did only invest $120 of it, as you can see here. So I opted to buy Microsoft, Starbucks, and Advanced Micro Devices. These were all slightly down over the last week or two, so I kind of bought the dip on them to some degree. Starbucks, their ex-dividend date's coming up, so I thought I'd get a little bit more of a dividend from them. That's pretty much all the moves I made. This extra cash balance actually went towards my loan that I took to buy those Brookfield shares. I've paid back $75 so far. I started with $25 and then I paid another $50 back, so I still owe about $175. Actually, I got this alert today that I can borrow at 0% interest until June 30th. I can take up to $5,000. So I don't know what I'm going to do with that. That is intriguing, but I don't really want to take on too much of a debt burden right now. So we'll kind of see what I decide to do, but I might take out a little bit more. I mean, at 0% interest, that's a pretty good deal. So we'll see what I do there. But that's about it for the long-term portfolio. Our unrealized gains here is about $5,000 or 23.4%. So you can see everything's still doing well here. We still only have one loser, which is Brookfield, but that's not surprising. So again, I mean, this portfolio is doing what it's supposed to do. It's not supposed to move too much up or down because these are all safe blue chip stocks for the most part. There's a few growth stocks in here, but really for the most part, I mean, they're all Fortune 500 names that you guys are all familiar with. The Roth IRA, same thing going on here. We're still up 21.13% or $400. For the quarter, we're up about 6%. For the month, pretty flat, but still up about 1.4%. For the week, we are just about even on this portfolio as well, but that's mostly due to today being down about 1%. So the only activity here was this bond market ETF paying their monthly dividend. So other than that, nothing really going on in the Roth IRA. So the big conversation piece today is the aggressive portfolio, where I did shake it up. I did make a sell and I did make a purchase as of today, as well as a small deposit. So all time on this aggressive portfolio, we're down about 11%. Most of this damage has been done here in the last month. We're down that 11% again. For the quarter, down about 20%, because we were positive on this portfolio for a while, but the last month has been very unkind. Particularly this week has also been pretty bad. Here's where I made that deposit, so that's why you see the sharp increase. Today, though, we are up just slightly, so let's get into the moves. So for the first time ever, I am a Tesla shareholder. I opted to buy Tesla. They'd been dropping recently. Tesla and I have always had a little bit of a complicated relationship. I've always wanted to get in on Tesla, but they've always been just ahead of where I feel comfortable buying them. When I originally wanted to buy them, when I was still heavily investing on Robinhood, they did not have fractional shares yet, and I just didn't want to pay, so much money for whole shares, so I just never did. And then by the time they did have fractional shares, they were way too expensive, so just never really matched up with Tesla at the right time. But with this recent slide, I have opted to pick up a little bit of Tesla. I bought about 13th of a share, 13/100ths of a share, I should say. So we'll kind of see what happens here. I did sell off my shares of Workhorse because they've been just doing quite terribly, to be honest, ever since they did not get the USPS contract, so I just decided to cut my losses there. I do have shares of Workhorse in another account, as well as I also have shares of DraftKings, which have also been underperforming for about the last month or so. Down about 30%. So that's been my biggest loser overall. Lemonade down about 20%. Teladoc Health about 20%. So nothing in this portfolio except Berkshire has been performing that well. So I may opt to kind of change how I approach this portfolio. I'm thinking about depositing $25 a week into this and just put it into my losers, whichever ones have underperformed the most, since these are the most volatile stocks I own, even though they are generally good companies. The next move or shakeup I am considering is I may decide to sell off these Carnival shares. They haven't really, for the last month, done too much. Actually, they've been down, but I am still up just a few dollars on it. So I am considering just taking this profit and putting into a more growth oriented, because Carnival, I more bought it as a pandemic stock that I thought would come back a little faster than it did. So if you guys have any suggestions on what I should buy with this about almost $80 worth of Carnival stock, I am all ears. So drop your suggestions down in the comments. But other than that, guys, not a whole lot going on here. I did get a dividend, actually. I need to touch on that from Activision. I believe that's the only company in this portfolio that does pay a dividend. So one last thing before I go is I will show my updated spreadsheets. Again, here's the aggressive portfolio sheet. As you can see, a lot of red here from a lot of these companies. Actually very, very red, especially over the last 15 days. So that is why I am looking to kind of buy some of these, I would say, pretty good companies on the dip. So I may make this portfolio a little bit more of a focus over the next couple of weeks. Again, here's the Roth IRA. Everything is red here today. My updated total, still $87.60 in dividend income per year. And then for the long term, do we have just one green stock today? It looks like it. So yeah, it looks like we have one stock, and that's AMD. But my updated total for dividends is $687.06 per year projected. So about a 2.6% yield. So again, guys, that's going to pretty well wrap up this portfolio update. But don't forget, do share your thoughts on what growth stock I should be looking at adding to my aggressive portfolio. That'll really help me out, and I might just take your suggestion. So guys, thanks for tuning in. If you did enjoy, go ahead and drop a like, as well as subscribe if you haven't yet done so, as well as go check out my most recent video where I talked about advanced micro devices last Thursday. It's a pretty good video if you like growth stocks as well as tech stocks. And then one last note is to check out my M1 Finance invite link if you would like to start using their platform. Check that out for more details, because you could get $30 just for signing up on the platform. But other than that, guys, don't forget to check out this Thursday's video, where I think I'm just going to talk about another individual company again. So I don't really have any investing concepts that really itching to talk about, so I'll probably just talk about another company. But with that being said, guys, I hope to catch you guys on Thursday.